Hello guys, today I'm going to be talking about market structure, fib level, F&R zone and chart pattern. So talking about market structure, when the market is actually breaking lows and not highs, it's actually a downtrend. As you all can see, this is actually a downtrend on the 4 hours time frame. As a day trader, I focus more on the 4 hours time frame to determine the direction of the market. But I also look out for zones where these markets might also react, like the frequent zones that markets might react, like these ones here. So talking about market structure, since the market is actually breaking lows, it's a taboo for price to break a high. It's kind of like, according to the laws of the trend, when the market is breaking lows, whenever it breaks a high, the market has actually changed a direction. And whenever a market is actually on an uptrend, it is expected to be breaking highs and not lows. Whenever a market breaks a low, the trend has changed from an uptrend to a downtrend. Now, talking about the fib level, most traders of nowadays don't really prioritize the fib level because they all focus on the modern trading strategies. Why the fib level works so well? Using the fib level, I I normally go to the 4 hours and 1 hour to actually measure the fib level. And now I have to explain about this before we start the practical. I will start showing you guys through the charts. Then the F&R zones are actually zones where price normally reacts. Like, as you guys can see, these lines here are my F&R zones that are mapped out. So price always react when it approach these zones. So these F&R zones are where I look for buy and sell positions. Sometimes I also look out for the buy and sell positions from the fib level. Now, moving to the chart pattern. Chart pattern is the action the candlestick takes, or the price action, or the behavior of the candlestick when it gets to a zone. Like example, as you guys can see, how the candlestick played here. It's actually has a long wick, broke this candlestick. This is actually a price action that played here. Let me show you guys another one. So this is actually a candlestick pattern. This is actually a price action that happened here. So I will have to show you guys as we move on. Now let's head over to market structure. When price is actually creating highs, let me find this. Okay. Market structure is like this. When price is actually creating high closing series of higher highs, high lows, and high low, and high. This is actually an uptrend. So you are expected to buy when market gets to this zone or this zone. That's an uptrend market. You are expected to follow the trend because the market has been breaking highs. But when market actually breaks this low, like example, price normally should respect here, but it came here, you are expected to buy from here. But sometimes it breaks below this. Whenever it breaks below this and comes back to the origin or to this high, you're expected to short. So this is actually how market structure works. This is the high, the recent high, recent low, higher high. Let me see. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, and market broke the structure and returned. This should actually, when market returns here, you should be expecting a sell to the downside. Now, in the case of a downtrend, when market is actually creating lower high, lower low, and lower high, lower low, and lower high, creating series of that, the market is expected to be breaking the lows, not the highs. But when the market actually kind of break this and come back to actually break this high, upwards, you should be expecting price to tap here for it to move, or here for it to start moving up. So when price breaks this high, you see something like this to start going up. Now let me show you an example on the chart. I don't want this video to actually get too long. Let's demonstrate it on the charts. This is actually a downtrend. I don't want to start from daily and weekly. This kind of, let me explain it using the 4 hours time frame. The market broke this high, created a low, also broke that high, this, and changed structure. The market changed the structure from here. This was a market structure shift. It changed the structure from here. Now this was actually a change of character, like change of character and break of structure, and returned. The market broke this structure, gave a higher low, and also broke another structure. Now this is where the Fibonacci retracement comes in. The fib level, look at how it works. Since this high actually broke this low, you measure it from that high that broke the low to the recent low. This is the recent low here. So as you can see, markets what's happening? The market reacted from this fib level. You guys can see. Look at this fib level, 0.618. It gave a candlestick pattern, which is actually a shooting star up there, and started reversing heavily. Let me show you another scenario. So now look at this. The market also shifted structure here. Market was actually creating minor structures there and also shifting it. Now let me count this. Let me take this from this to this. This is also a structure that was shifted. If you take that Fibonacci retracement and start from here to here, you will see that it's also a level that it gets to. Okay, now I want a clear chart where the Fibonacci actually broke a structure. Okay, let me use the case of an uptrend. This was an uptrend. When market broke this high, this was a high low, and it broke it. Now let's try this Fibonacci level. As you can see, markets actually got to a fib level which was 0.5 and started going up, but normally I do use the 0.618 and 0.786 for my entries. Let me explain about the F&R zone. The F&R zone are actually frequency and recent zones where markets tends to react, because gold respects structures and zones a lot. Gold respects market structure and gold respects zones a lot. Whenever it gets to a zone, it always reacts. So the zones are this. F and R zones. Let me start from okay. Now, for you to know a zone, for you to know an F and R zone, the candlestick must close 2 candlesticks above for an uptrend and 2 candlesticks below for a downtrend. For example, on this 4 hours time frame, when market was here, when it didn't get to this place, as you can see, this was a zone that market, these 2 candlesticks closed above it. And look at this, that was actually the origin that broke the structure. That's a zone that broke the structure. That is where we put the F and R zone. And also here, as you can see, the zone that broke the structure, we put it there, and all that. Even though I'll still make a video explaining more about this F and R zones, but I just want to kind of show you guys how these zones are and how it works. The strategy I use is actually the F and R zone. Some people can call it the support and resistance and all of that, but they all works. Both the support and resistance, F and R, all of them, they are all working. Even those using SMC, they're all working. So depends on your strategy. Just stick to the strategy that you're using. Okay. So I'm actually explaining this to also show you the strategy that I use personally, and also have been making money from the market. So yeah, I think that's that about that on F and R zones. Okay, according to what I'm actually expecting from price right now, this is a zone. Since price has been breaking lows, we are looking more of sells than buys, because this is actually the current trend, right? This is the trend that is actually happening. Price is actually breaking lows and not high. So when price is breaking lows, we are expecting to sell. So since this was the zone that broke the structure, this zone actually, look at it, it broke the structure. So we are expecting price to get back to this zone, or for price to get to my Fibonacci level for me to sell. Now let me head over to the 1 hour time frame. I like using this 1 hour time frame to mark out my fib levels, because you can also see some zones on that 1 hour time frame. There are zones there, like this is also a zone. This is also a zone. Let me even mark it out. This is a 1 hour zone. So I even like price to come here. I will be more confident on this trade because it's on an F and R zone. Now let me use the Fibonacci retracement tool to measure from the high to the low. Excuse me. Now I will be expecting price to actually start reacting from this zone, from here up to this place, for me to start selling. Price might actually try also break this zone and come to this extension. So these zones are where I'm expecting price to react for me to sell. It might come to this level. It might come to this level, that F and R zones, and there is also the Fibonacci retracement level there. It might also like to come to this 0.786. It might also like to come to this F and R zone up here, this 1 hour zone. It might also like to break above to come to this other zone. So anywhere that it comes to, the only thing that will make me to enter the market is where I see a chart pattern, which is the last topic, chart pattern. This is the entry that I'm going to use to enter these markets whenever it gets to these zones. Now, since I'm expecting price to these zones, what I will have to do is to wait. I'll have to wait, even though the price is actually reacting on these zones for a buy, but I'm not going to enter this trade for a buy, because this is not my trading session, number one, and also I wasn't expecting price. I wasn't expecting to buy price from there. This is where I'm expecting price to come before I'll be very confident for the buy. I have my reasons, and I'm not going to talk about it on this video. So let's just concentrate on what we have now. When price gets to this zone, I'm expecting it to do something like this. That's the same strategy I previously talked about, and that's the same strategy I'm using. When price gets to this zone, okay, let me say this F&R zone, this is actually a high probability trade for me than these zones. So when price gets to this zone, okay, I'm expecting it to do something like this. Come down, create a first leg, then come up. Most times it normally does this. That's good for you. Gold would like to do head and shoulder, inverse head and shoulder pattern of all of that. So create and come back. Okay, come back to so sorry about that. I'm expecting price to come to this zone, create a first leg, take it out, also change the character and return. When it returns to this place, this is what I'm going to buy. I could have taken a sniper entry when it gets to this zone, but based on how gold reacts and manipulations and all that, I would like to be very, very conservative. So I would like to enter this market here. When it breaks the structure and returns, I have to enter it. My stop loss will be above there. So that's actually my strategy on how I'm going to enter this market if it gets to this zone. Otherwise, it might also do something like this. It might not create that head and shoulder pattern. It will just do like this. What am I doing? Sorry about that. It might just do like this. Come down, come to this place, and break it. Retest before it comes down again. So this will be my entry. Coming to this zone is going to be my entry. So, but if it actually breaks this zone upwards, if it breaks this zone from here and breaks this zone and comes to this zone, I will be expecting that same pattern to create. Yeah, or even come to this zone, but I'm expecting it to start reacting from these zones. So if it comes to this zone and do something like that and break it and actually boom, this is what I'm expecting it to do. So, and this will be my entry. This is my entry above the other zone. Yes. So that's actually what I will be expecting. But right now, market is still tanking. It's still tanking. We wait for a pullback or price coming to my zone before I buy. But for now, I don't think I'm going to buy from here. So that's all for today. I hope you actually gain something from this video. Please like and also follow for more. Don't forget to comment and also join my Telegram group for signals and mentorship. Thank you.